Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, January 7, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? A lot of stuff going on. Another down day in the trading parlance. S&P was down about 60 some odd points. The SPY was down $6.73, a little over 1%. They were, as they say in the trading parlance, even yesterday, rejected at the would-be or could-be sooner or later convergence of the 20 and 50 period moving averages. Let's keep in mind the big picture. Here's the weekly chart. She's above all the moving averages, and the trend is, in fact, your friend. Can she give up the 20-period moving average on the weekly chart and last week's low? And the answer is, of course she can. What happens if she does? That's the important thing. What does it open the door for? Well, there's a zone, 576.70 down to 571. It is a zone of support. It also coincides with the neighborhood, in the neighborhood of a big-time weekly chart breakup candle low. It's not quite at the low. However, this is a zone you want to put down on a sticky note. It is what they call in the trading parlance pretty much a full stack situation. There's a gap here on the daily chart. You can see it pretty clear. And then just below the gap, there's another number. Might come from the magic calculator. It's also a former breakout area-ish place, coming back to retest a former breakout area. And by the way, if you're down there, we could make a case there's some market symmetry going on down there. All these things are taught in the course, in the class, MSF Masterclass, which includes the calculator. So check it out. MSF Masterclass sells for $29.95, no shipping and handling. And the calculator itself would cost you $1,788 a year if you bought it monthly at $149 a month. However, how can you put a price on some of these numbers that I show each and every night coming out of the magic calculator? We've got traders in the live room that took the course, MSF Masterclass, having a ball, making money with the magic calculator. How they doing? Just for fun, tonight we'll check out the Qs with the magic calculator. You have a high here of 527.92. So what we'll do is bring over the calculator. We'll put in the value. It was a pivot high, 527.92. Hit calculate. And you're going to see there's a 516.49 in there. Now we'll put it on the chart. That wasn't low of day. However, that was an important number right out of the calculator. Here's a 5-minute chart. Look at that bounce at 516.49. Up to a high of 520.33. Intraday on the Qs. That's over a $3.80 bounce intraday quickly. It's an intraday tool. It's a swing trading tool. Let me show you something else that's a little nifty. We're looking at a chart of Nvidia. We're not looking at it from today's perspective. We're looking at it from the past to see how the calculator would have done. It's called backtesting. It's called validating the information. Let's take this pivot high right here. Happens to be 140.76. 140.76, you hit calculate, and you come out with a string of numbers. Now, I'm going to pick one out in particular, and then you'll see why after the fact. 92.43. Now, why would we be interested in 92.43? Well, maybe not to the penny we would or wouldn't, but what's interesting is a number of things. Let me explain why we call this type of situation a full stack situation. We have a weekly chart. We have a big time weekly chart breakup candle low. Those of you that have been around a while know why I love those. You also have a gap down below. The gap is at 92.48. That coincides with 92.43 in and of itself. And by the way, there's no chance that the calculator knew there was a gap there before that high was put in. No chance. And I don't believe there are any accidents or coincidences in the market. What else we got? Well, the market ran up to this place and then was rejected. And then they ran back to that place and busted through. And that in and of itself creates or becomes a former breakout area. So this area here is a former breakout area. Granted, it's a little bit higher than 92.43, but the general concept is here's a breakout area, here's a breakup candle low, and here's a gap. And the gap coincided with the magic calculator. They spiked the gap by a little bit and ripped it back up in the other direction, never even came back to it. So just from a tools perspective, would you like to have the magic calculator? Can you see how this might work for you? You can try it out for a few days. It's a magic calculator. Back to the spiders before we go on to other things. We did have a little bit of an uptick in volume today on the downside. That's of note, puzzle piece on the table. Remember yesterday we talked about moving averages. You have the 4-hour chart, got rejected at the 50-period moving average. 3-hour chart, convergence of moving averages, rejected. 2-hour chart, 100-period moving average, rejected, now below all the moving averages. Below all the moving averages, trend is your friend. Above all the moving averages, trend is your friend. Above or below or in the middle, sometimes it's a neutral type of reading, but certainly below all is bearish, above all is bullish. No two ways about it. Hourly chart, you can see here, intraday, she bounced around the neighborhood of the entrance to no man's land, also referred to as a gap window, also taught in my courses. We usually get a bull-bear battle in those places. What happened inside the numbers today? Well, we had some early turnaround Tuesday discussion. We had an early pivot, 595.40. You can see on a 5-minute chart, right of the vertical is today's activity. She opened above the pivot and then sliced through it like a hot knife through butter. We had some numbers above she never reached. We had some numbers below if she gives up the pivot. First, towards yesterday's low, 593.60, and then the gap left open last week at 591.90. You could see how these numbers, there's 593.60 and 591.90. You could see how they were of importance, but today they were not bounceable numbers. She sliced through, she fought back, became resistance. They went in between for a while, gave it up, tried to recover, and then gave it up into the end of the day. So the numbers, while important, weren't bounce areas. The market ended up stair-stepping lower all day. Let's go see what happened early on the 9 o'clock post. What's the scoop today? Where are we headed? What's the early look of the market? Well, 595.40 is the pivot above, and the bulls want to run a test of, here's another number, 597.35 as a way station up toward 598.55. So let's take a look at 597.35. That was on the board at 9 a.m. Eastern Standard Time. Check it out. That was essentially within pennies, high of day. Did we have traders in the live room short that place first thing in the morning right around the open? You betcha. Both numbers are important and independent of one another. They create a resistance zone where we would expect a reaction back in the other direction for a short scalp with potential. How you doing? On the board 30 minutes before the markets even opened for business. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day from a commentary perspective on the S&P. We had two stocks on the move today. One hit its entry objective, the other didn't. Let's take a look at Mr. MicroStrategy, entry number 1, 363.35. That's it. That was the trade. Came into it right out of the chute, bounced back up, made a high in this candle at 371.28 off of 363.35. That's a tremendous intraday bounce in a matter of minutes. They did the deal. The rest doesn't matter. They gave us the trade. about the list of a dozen markets. What I would urge you to do is put some of these numbers on your own charts, see how the market reacted to them from an intraday perspective. Not every market will hit every number each and every day. These are important numbers, so if the market is coming close to one of these numbers, you want to know about it. It may be a tradable opportunity when you put it together with everything else I teach in the MSF Masterclass. Are you starting to get it? We use the calculator. We use the stuff in the class. We use the numbers. We put it all together in a package to be a successful trader. That's the way it works. What's going on over in Camp IWM? We talked about this last night, didn't we? You remember this drawing last night? We talked about the wedge. We talked about the 20-period moving average. Didn't even reach it. Below, she's in trouble. Now back below all the moving average, she's in trouble. If they break the chain, they break the chain on the upside. This will generally, this type of pattern, this is a bearish, wedge-ish, flaggish, call it whatever you want-ish type of pattern. You have a move down. This is considered the flag pole. Now you have the wedge or the flag, and it results in an ensuing move in the southern direction. Write that down. Put it on a sticky note. Nothing has really changed since yesterday other than the fact that it's beginning, ing in italic, beginning to work out that way. Now, what about the folks down at the transportation department? The Lone Ranger today, up 38 points. Everything else is down in the red. They're up 38 points, 0.25%. What are we going to do with team transports? They are the #1 canary in the coal mine, second favorite market leading indicator. Now we have a divergence between the IWM and the transports and the spiders and the whole 9 yards. Well, here's the deal. She's below everything except the 200-period moving average. We're not going to make a federal case out of a one-day divergence. However, if she gets above yesterday's high and starts working her way up toward the high of the most recent breakdown candle in the sequence up in this neighborhood and gets above there, then she's likely done on the downside. And if she does that while the spiders and the IWM are still struggling, that will be our potential canary in the coal mine. I would write that stuff down, put it on a sticky note, or mark this part of the video. Word to the wise, always look at the IYT when considering the transports. I hold more weight in the thing rather than a derivative of the thing. The IYT is an exchange-traded product. It's a derivative of the thing. But look where it is in relation to the breakdown candle high. They've already run a test of it. And if they get above and stay above, that could be a canary within a canary. Nobody knows for sure. I look for things that other people aren't looking for or can't or won't or don't see. Put this on a sticky note inside your desk. Don't show it to anybody. What about the Q people? Pretty big down day, almost 2%, $9+ down on the Qs. Looks like she's breaking down from a daily chart perspective. Give up last week's low, and she will have broken down. You go over to a weekly chart and say, hey, wait a minute. Is she just going back to run a test in the vicinity of the 20-period moving average that happens to coincide with a 500 big fat round number? Last week when they made a low, they never really got to the most recent breakout area. That's 503.52. So she came close and bounced away, so we're not holding that much weight in this any longer. However, coming into the 20-period moving average at 500 is a thing. Now let's go back over to the daily chart and see where that would take us down here. So it's now approaching, get to and below the 500 mark in that neighborhood, and you're approaching the 100-period moving average. And some important lows down here. We'll draw a box over this. The market could have broken down here, chose to go the other way. So we'll call this a former breakout area. Funny how that works. There's also a gap down here if you want to go down a little bit more. Spike the 100-period moving average. Fib retracement 382, 594 and change, 594.84. Okay, you see how we're starting to build a full stack. Let's go over to the magic calculator. Let's take the pivot high in the Qs, which is 539.15. We plug it in the pivot high, we hit calculate. What we're looking for is something in that neighborhood, 493.71. We know that 504.88 is too high. We're looking at 500. Now we're looking at a spike of 500, and we find 493.71. 493.71 is just above a gap. The gap is at 492.21. There's an entrance to no man's land. This seems to be the midpoint phenomenon in between. Constitutes a spike below the 100-period moving average. There's no guarantee that we're going down to 493.71, but what there is confidence in is if she gets in the neighborhood and slightly below, slightly above 493.71, there's likely garden variety of chart support. Former breakout area, 100-period moving average. You go to a weekly chart, she's spiking through the 20-week moving average. Oh, by the way, you have a breakup candle low in the vicinity of lower. If within the next week or two she gets down to that level, most traders, most investors, most media pundits will be crapping in their pants. They'll be talking about the big correction on the way, and the market will be ready to turn around and bounce back in the other direction at that price. You heard it here first. Moving on to the XLF, nothing happened today other than down 11 cents. We're not going to make a federal case out of it. We know one thing: if she can't recapture this black line, then this is a bearish pattern that's going to roll over in the southern direction and target 46.60. Sticky note, write it down. What about Smash Mouth? Almost gave up the entire run from yesterday, coming back down to do what? Run a test of the most recent breakout area. What's the most recent breakout area? The triangle, the top trend line of the triangle, down 2.38% today, $6.19. Still an open gap from the other day. However, coming back to run a test of the triangle she broke out from. Now, what happens if she were to get back in the triangle and go back down the other side? That would be not good for the bull case. You heard that here first. That would be slightly omen-ish for the semi space, not good for the tech space, not good for the markets as a whole. By the way, if I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.